What's up, future millionaires? It's Mike the Investor. Now, in this video, I'm going to share with you why I quit dividend investing. Now, I still believe that dividend investing is a lucrative way, to build cash flow and passive income. But me personally, I decided to go all in on crypto, for 2021. And so what we're going to cover in this video, the first thing we're going to dive into, I did a screen recording of my entire dividend portfolio so we can see what the value was at that time and every single stock that I held. Secondly, I'm going to show you how much dividend income annually I was making from this particular portfolio. And then thirdly, we're going to dive into the two main reasons on why I quit dividend investing. Now, before diving into it, definitely take advantage of grabbing some free Bitcoin by using the Voyager and BlockFi link down below, where you can earn passive income just for leaving your cryptocurrency on the platform. Now, let's get ready to dive right into it. All right, crypto investors, welcome back to the channel. And before diving into this, I just want to say that this is strictly for educational purposes, not for financial advice. Now, if you do want to look at a specific part of this video, there will be timestamps down below. But I'm gonna go ahead and pull my phone up here so we can check out the screen recording of my old dividend portfolio. As you can see, April 9th was when I actually sold out of all of these, and the value was about $12,800. Don't worry, you're gonna get to see a little bit more of this as well. And so as we can see, here's Microsoft, I'm up 48%. Here's Apple, I'm up 11%. We have IBM up over 14%. Johnson & Johnson up over 15%. We have Pfizer, down over 2% actually. Coca-Cola up over 11%. We have Altria, I'm up over 21%. We have 3M up over 24%. Bank of America, I'm up over 53%. We have IIPR, I am up over 153%. Realty Income, I'm actually down almost 10%. And then we have Churchill Capital. This is not a dividend position, but I'm up over 28%. So at that time, around April 9th of this year, you can see that my dividend portfolio was around $12,800, and every single position paid me a dividend except for Churchill Capital CCIB. And so I just wanted to be transparent with you and show you that. And I will say I kind of stopped investing heavily in my dividend portfolio towards the end of 2020. And so I started investing a little bit more, into a growth portfolio, which I had on Webull. And at the time I had about $5,000 on that portfolio. I sold out of all of that as well, and all of that is in crypto. And so now let's kind of look at how much was I actually making from the dividend portfolio itself, in annual income. We can also break that down, by month basis. So let's briefly check this out. Okay, so this is the platform that I used to use to track my dividend income, and you can see the value amount is still about the same, $12,800, and that's because dividend stocks do not grow that much when it comes to capital appreciation. You buy them for cash flow and for passive income. And so as I want to show you here, you can see the dividend yield for the entire value amount was 2.96%. This was the yield that I was making on my dividend portfolio. And so you can see for annual income, I was making $379 a year, which is not a lot for the value amount that I had invested, but this is also a very conservative, dividend yield as well. And just to show you that these are all the same stocks as well, the only thing is PSEC that was different, and that's only 5 shares. That's not going to make a huge difference, all right? That was only about $3.60 in annual income. So I just wanted to show you that. And so real quick, let's just break down my annual income by month. Let's just say if I still had this portfolio, it didn't really lose any value, which is good, but it is still at least producing income. And so let's just take that $379, pull the calculator up here. And so we're going to do 379, and we're going to divide that by 12 months. And you can see that's $31.58, that I would be making. Now that's passively, but at the same time, it is not enough to live off of or even pay any significant bills. And so I just kind of wanted to show you what my dividend portfolio, was producing. So remember, towards the end of last year of 2020, I stopped investing a lot of money into my dividend portfolio, which would have made it a lot bigger over time, which would have made me more money passively. But I decided to go a different route, and I knew that I was going to be all in crypto. Now, I did have a growth portfolio, as I mentioned earlier, which I had about 5K in, and I made a lot of money from EV stocks, which I put into crypto as well. But now let's dive into the two main reasons on why I got out of dividend investing and the entire stock market. Now, of course, there are other smaller details as well, but these are the two main reasons why I personally, got out of dividend investing and got all into cryptocurrency. So reason number one is Bitcoin and crypto has shown to be the best performing asset class over the past 10 years. We understand with so much handwriting on the wall that crypto and blockchain is the future. And so for me, if I want to put my money and my capital into an investment that's also going to pay me passive income, I also want to be able to put it into an investment that's going to give me capital appreciation, which in result is going to give me more passive income because I have more value that I'm earning that percentage on, which you're going to see in reason number two. And so let's briefly look at this article, just kind of breaking down, the top 4 asset classes, which crypto is number 1 right now. So let's briefly check this out. Now, this article is coming from marsmasters.com. It's pretty informative, and you can see Bitcoin has been the best performing asset of the last decade by 900%. That's massive. And you can see this came out March 15th, 2021. So I just have a couple points highlighted here. We can see that Bitcoin has performed all asset classes by at least a factor of 10 over the last 10 years. Bitcoin has produced an annualized return of 230% on average, which is more than 10 times the second ranked asset class. And so the US NASDAQ 100 index comes in with 20% annualized return, and the US large caps has a 14% annualized return. And then at 12.19% annualized return over the last 10 years would be the US small cap stocks, is the only other asset class that has achieved double-digit annualized returns. And when we look at gold, we can see that the data has showed that gold has produced an annualized gain of 1.5% since 2011. That's over the last 10 years. And we can see that crypto is the best performing asset class. Even if you just single out Bitcoin and say, well, this article is kind of talking about Bitcoin. If you just go and look at some of the top 100 cryptocurrencies, and you can see that you can stake mostly all of them, you would have gotten more money investing in crypto, not only from capital appreciation, but also from staking as well. Because with crypto staking, it's able to compound daily. It's also able to compound weekly, whereas with dividends, they only pay out a certain set amount. And this is the frequency for dividend payments. They're either going to pay out monthly, quarterly, which is 4 times a year. They're going to pay out twice a year, which is semi-annually, or they're going to pay out once a year. Those are the times that you can get paid out with dividend payments. Whereas with crypto staking, you can get paid daily, weekly, and you can compound it faster, meaning you're going to make more money faster. And so now let's look at the second reason on why I decided to quit dividend investing, which I kind of said already. But the main reason is I'm able to make more money, or I should say I'm able to build passive income faster with less money. And so I'm going to briefly show you a website that you can use if you're thinking about getting into crypto staking. It's called stakingrewards.com. Let me briefly just show you something. Okay, so the Cake token, which is the native token of PancakeSwap DEX, this is a cryptocurrency that I am personally staking, all right? And so I just want to show you something. And as you can see, just on $1,000 here, just on 1 year, you can see that the current APR is 71.44%. That's crazy, right? And so as you can see here, on $1,000, you're actually making, $58.73, almost $60 per thousand every single month. And you can see for the year, I'm actually making $714.49 on the year. So I'm actually making more money on entirely less money, as you can see. And so now I want to show you, if I had the $12,800 I had invested in my dividend portfolio put in this particular cryptocurrency at the same rate, how much would I make? I'm already making more yearly than what I would have been making, with that much invested. So let's just check this out here. So 12,800, you can see the estimated monthly earning at the current rate, which it does fluctuate. You can see is $751 a month, which is over $9,100 a year. That's crazy. And let me show you one other thing. Let's say I wanted to compound this and reinvest every single dollar that I earn. And this is going to be at the same current price as well. And so we're going to hit compound. Now you can see you're making $773 a month at this current rate. You can see the rate has went up to 104% because you have compounded, and you can see now instead of $9,100, it's over $13,000 on the same investment amount. Now you can definitely compound, with dividend payments as well, but crypto staking is going to compound faster, which means you're making an APR on a higher value amount, which means it's going to grow your income faster. And for those of you that may be curious on how much the Cake token actually costs, let me show you. I'm gonna scroll up here, and at the current time of this video, you can see it's around $14.73, so almost $15 a token. And so you can see the APR that you're able to make, and the reason why you're able to make such a high APY, or APR I should say, is because it is on a DEX, a decentralized exchange using DeFi, which is decentralized finance. All right, and with decentralized finance, there's no centralized or government body that is controlling these exchanges, which allows us to make higher APRs. And so I definitely did some videos on PancakeSwap if you're curious. Now some of you may be saying, if you're new to crypto, Mike, these rates are unsustainable. Mike, this is not going to be able to keep happening. Now my response to this statement is that DeFi is going to be here when the smoke clears. Also, I believe that DeFi is the new banking. We saw at the highest peak of the crypto market, DeFi got close to 100 billion by itself just as a sector. That is massive. And we also see big money that has got into DeFi as well. And so DeFi is definitely going to be here. And when you look at some of the larger decentralized exchanges that already have market share, I believe those are going to be some of the ones in the forefront that continue to grow. And if you can get on, somewhat of the ground floor, not only are you able to get those great APRs, but you're also able to get a ton of capital appreciation as well. We already saw that crypto is the best performing asset class, so that is the best of both worlds, getting a ton of growth while still being able to make a ton of passive income just for holding your asset. Now some people may be saying, well Mike, we have dividend kings, we have dividend aristocrats. Trust me, I know all about it. Dividend kings are, companies who have consistently, increased their dividend for over 50 years, which definitely gives it a lot of stability and very safe investment in my opinion. And then you have dividend aristocrats, which are pretty much the same, but they have increased their dividend for a minimum of 25 years or more. And so these are definitely strong companies to have, which I definitely have some dividend kings and dividend aristocrats in my dividend portfolio. And that's one reason why the dividend yield also was pretty conservative. And so these are just some brief reasons on why I personally got out of it. I'm very aware of the stability of dividend companies compared to potential crypto staking options. But at the same time, I truly believe that education limits risk. And even with some centralized exchanges now, you can still earn more APY or APR with stable coins or other cryptocurrencies compared to holding a dividend stock that does not have any growth behind it. Now, some people may say, what about dividend growth stocks? Well, the problem with that is they have a very small dividend. So yes, you may get the growth, but you have to wait a long time for that dividend to grow over time. Whereas with crypto staking, you get best of both worlds. And this is why I got out of dividend investing. So hopefully this video, kind of cleared things up, because I know this video was a little bit long overdue. I just was making different content and haven't put it out yet. And I kind of wanted to figure out how to actually make this video for you guys. And so if you guys enjoyed it, definitely smash the like button. I really enjoyed making this one as well. I want to say thanks for watching. If you haven't connected with me, on my social platforms on Twitter or Instagram, definitely consider connecting with me at Mike the Investor. That is all I got for you. Remember to stay inspired, stay motivated, always invest in yourself, and I'm out.